Hey, what's going on, everybody? My name is Zach Pasquarello. I am a certified QuickBooks Pro advisor. I own Harrisburg Bookkeeping. I'm a bookkeeper and I own Route 20 Trucking Company. I own a couple box trucks and I've been sharing my weekly updates with my box truck business. So during the day, I run my bookkeeping business, and a few months ago, I decided to invest in a box truck business. So I just wanted to share my experience and my perspective. I don't operate the trucks, I just own the trucks. So there's three different levels, I suppose. You could be an operator, you could just drive the trucks. You could be an owner operator, and kind of a good mix, assuming all of the risk, but also assuming all of the reward. So as an owner operator, you own the business, you own the trucks, but you also operate the trucks. So you get all of the profit, all of the pay from the loads. And then so you've got operator, you've got owner operator, and then me. I am just an owner. So I don't operate the trucks, I just own the trucks. So I guess you could say I assume all of the risk and I get none of the reward. So if you guys have been following along with my videos, you guys know that I had a rough start. I started with an 18-foot box truck, and if you are watching this video and new to the box truck business and thinking about starting with Amazon Relay or starting with a dispatcher, starting with the DAT load board, thinking about going local or over the road, whatever you're gonna do with your box truck, I highly recommend getting a 24 or 26-foot box truck. Please do not make the same mistake I did. Do not get a 22, 20, 18, 16, 14-foot box truck. Nothing less than 24 foot. The width and height doesn't really matter as much. Everything's pretty much 8 foot by 8 foot, give or take 6 inches. If you can get a box truck that's 100 inches high, then that'll be even better. But typically, it's going to be 8 foot wide. A standard pallet is 4 foot wide, so you'll be able to fit two pallets side by side as long as it's 8 foot wide, and then 90 to 100 inches tall. But okay, that's enough of my background story and where I came from. If you guys want to see my full journey, my full profit and loss, all of my expenses, all of my experiences, go ahead and subscribe to my YouTube channel and rewatch all of the videos that I posted the past 2 months. I've been sharing all of my weekly updates with all of my profit and loss in my QuickBooks. So without further ado, we will jump right into it. And I will show you all September week 3. This was by far my best week. Let me get my face out of here real quick. Move it out of the way. Nope, not that. There we go. Okay, so this is my QuickBooks. So I use QuickBooks Online. Like I said, I am a certified QuickBooks Pro advisor. I am a bookkeeper, and I do QuickBooks and I do bookkeeping for a living, full time. I own my own business. So the box truck business is just an investment that I decided to take on a few months ago. And so I just wanted to share with you all, from my perspective as an accountant, as a bookkeeper, the box truck industry, because a lot of people show the driving side of it, they show the maintenance side of it, they show the dispatching, the brokering side of it, but not many people show the accounting and the bookkeeping perspective. So, okay, we will jump right into it. So I had a really good week. You can see here I had $3,700 of revenue come into my account from my factoring company in the third week of September. And if I click on this, on my revenue here, you can see here that not all of these loads were run in this past week. Actually, none of them were run in this past week. So I put the date here, September 8th, September 20th, September 17th, and September 15th. So you can see here, I'm going to zoom in a little bit more. Hopefully you guys can see that. So I just wanted to show this as a good perspective, just so you guys know, even with a factoring company. So I factor my loads once a week because they do charge an additional $10. And I'm going to talk more about my factoring company, but they charge an additional $10 on top of the 3% every single time you factor a load. So if you batch all of your invoices together, they'll only charge you that $10 once a week, which is what I opt for. But if you're only running $1,000 a day and you factor and you submit your invoice every single day to get paid, you're going to end up paying an additional 1%, which is $10 on that $1,000. So I like to batch all of my loads together. So you can see here, this September 8th, this load was a little bit late, but September 15th, 17th, and the 20th. So I submitted all of these factors, I think probably at the beginning of last week, and I got paid for it all on September 21st. So you can see here, you're going to want to save a little bit of cash reserves to pay your bills. Even with a factoring company, you still expect to wait probably 2 to 5 days before you actually are able to use the money that you earned from running those loads, even with a factoring company. If you don't use a factoring company, God help you, you're going to be waiting 30 to 90 days to get paid. So I highly recommend either do quick pay or use a factoring company. Either way, you're going to get paid in hopefully 2 to 5 days. So this was 4 loads. You can see here, I got $500, I got $700, and then my revenue significantly increased. That's because this is right around the time, September 17th. That was my first load with a 26-foot box truck. So, and last week I talked about how I got 2 box trucks. I started with the 18-foot truck, and then I got an extra 26-foot truck. Now I've got 2 drivers. I've got the 26-foot truck going over the road. The 18-foot truck is staying local. And you can see here how different the revenue is already, even with my first 2 loads with that 26-foot box truck. Honestly, the distance really wasn't all that different, but I'm getting closer to $2 a mile instead of like $1, 25, $1.50 a mile with that 18-foot box truck. So it's definitely possible. I think my dispatcher and I, we average $1.80 a mile with a 26-foot box truck. That's our goal, even with deadhead. So our goal is $1.80 a mile. Sometimes he does better. He rarely ever does worse. He usually does better than $1.80 a mile. But this is the revenue. So the revenue is picking up. The revenue is picking up with the 26-foot truck. It's so much better than the 18-foot truck. And like I said, if you guys are thinking about getting into this, please get a 26-foot box truck. Do not get an 18-foot box truck. Okay, so there's the revenue. I haven't gotten paid for any of my local deliveries. I got a second driver. He started last week with the 18-foot box truck. He's doing local deliveries. He's got a contract with Lowe's and Home Depot. He's just doing door-to-door stuff. He picks up early in the morning at like 7 a.m. and he has 15 stops throughout the day. He drives like 200 miles and 15 stops. And it's nothing inside the house or in the backyard or upstairs or in the basement. It's all just drop it on the front porch, drop it in the driveway. It is heavy items, but I've got a lift gate. He's got a dolly. He's got a pallet jack. So he makes those 15 stops every single day. And I pay him just a flat rate every day. And it's not really profitable. It's not profitable at all. But I'm going to use that 18-foot box truck as an introduction to my company. So I'm going to hopefully transition this 18-foot box truck driver to a 26-foot truck that I'm going to get in 3 months. I'm going to get a third truck in 3 months, and I'm going to send him over the road, and then I'll just hire somebody else. They'll pick up where he left off with the 18-foot truck, and I'll just kind of rinse and repeat. I'm going to use the 18-foot local deliveries just to kind of get used to the new employee, get him used to driving the truck, see if I can trust him, see if he likes the job, see if he wants to go over the road. And then I'll just continue cycling through that 18-foot box truck and kind of graduating them onto the 26-foot truck. So that's my plan, kind of turning a bad situation into something salvageable. Like I said, the 18-foot truck is really not going to be profitable, but it's going to be a valuable asset to my company. Okay, so dispatching fees, $300. That's standard, 10% of my revenue. Paid my driver 1,100 plus 300 for hotels, so almost $1,500 last week, which was pretty good. So total cost of goods for my labor was almost $1,800. So I made $3,700 and spent $1,800 on labor. But keep in mind, it's not an exact one-for-one match because, like you saw in that breakdown of the revenue, one of those loads was actually from September 8th. So it is a little off. But at the end of the year, at the end of the month, it's all revenue. It's all the same. Fuel, $500, $450. I started using a fuel card, Fuel Man. I was using the EFS fuel card with TAFs, and the app was horrible, so I would not recommend using the EFS fuel card, but I would recommend using Fuelman. They've been really good to me so far, and I pay the bill every 7 days. I've got like a $4,000 limit. They've got pretty good rewards. I can use it at almost any gas station, and I just pay my bill every 7 days. So $450 on fuel that week. So gross profit after I paid my drivers, my dispatcher, and paid for fuel, I'm sitting right around $1,500. So cost of goods sold is like direct materials, direct labor that goes into your business. So that's where I account for things like driving and fuel and my cost of goods sold. And then gross profit is just your revenue minus your cost of goods sold. So that's your gross profit. That's kind of what you're really making after all of the direct materials and direct labor goes into your services. Okay, so gross profit, $1,500. Now we come down to the expenses. So factoring fees. I want to touch on this real quick. I'm with TAFs. I think I signed like a 1-year contract with TAFs, and they charge me 3% for all my loads, but they also have been doing this thing that's really annoying, really frustrating. I can't get a good answer on it, but they charged me an additional like $100 for, I don't know, like they do some research, some back end research, and they look into your company and they see if anybody else has you as factoring. I don't know what it is, but they just keep on charging me extra fees on top of the 3%. So I'm a little frustrated with them. I would like to get out of my contract with TAFs and maybe look for a different factoring company. I know all factoring companies have hidden fees, but I'm just a little frustrated with them. So that's $118. That's the 3% plus every single time. Like I said, every single time I submit invoices for factoring, they charge me $5 to transfer the ACH from TAFs to my fuel card, and then they charge me $4 to transfer from my fuel card to my debit card to my checking account. And so I called them. I said, "Hey, can we just cut out the fuel card? Can we just transfer directly from TAFs to my checking account?" He said, "Yeah, no problem, but that's going to cost $10." So I was pretty frustrated. Like either way, they're charging me $9 or $10 just to get me my money on top of the 3% they're already charging me to factor. And whenever I signed up with them, I agreed to use their fuel card. And so they basically gave me like a quote unquote discount. So that instead of charging me 3.5%, they're charging me 3% for factoring. But now that I don't want to use the fuel card, he told me he's going to start charging me 3.5% for all of my loads that are getting factored. So I just feel like they keep on piling on the fees. They keep on increasing the fees. They keep on throwing in hidden fees. It's just fee after fee after fee with TAFs and the factoring company. And I've heard bad stories about them. I don't know. I mean, they've been okay to work with so far, but I might look to switch to a different company. Enough about factoring. Um, if you guys want to do some more research on a good factoring company, there's plenty of blogs out there that talk about good factoring companies. Just do your research and read customer reviews. Okay, so I bought some supplies for my first truck. I bought some straps for the back of the truck to just to hold the dolly up against the wall, and I also bought a phone mount. That way, my driver can mount the phone whenever he's looking at directions. Obviously, you don't want your drivers, or you don't yourself, don't want to be holding on to your phone while you're trying to drive your truck. And then $53. Let's see, I got a first aid kit, a fire extinguisher, and a hide key for my second truck. So, with DOT and FMCSA compliance, everyone needs to have a first aid kit and a fire extinguisher in your truck. And then I also have a spare key hidden underneath my truck just in case my driver gets locked out. It only costs like $6. Just a little peace of mind in case something were to happen over there. I hate for my driver to be in Michigan or be in Florida or be in Texas and get locked out of the truck and have to call a locksmith. I just don't want to deal with that. Okay, so let's see, job supplies, now office supplies and software. So I did spend a lot of money on Clockify, which I'm using Clockify as like my timesheet for my local driver so he can clock in and out. And I was paying him hourly at first, but now just the way the contract is working out, it just makes more sense to pay him a flat fee for the day. But I looked into it, and per DOT compliance, I still need to track his hours. Even though he's staying local less than 150 miles away, I still need to track his hours and see to make sure he's not driving more than, I think, 14 hours a day. So he's not filling out like a daily driver as long as there's no ELD, but I do still have him clocking in and out. And I spent like $100 to sign up for me for Clockify so that I can enable GPS tracking. And then it was an additional, I got two extra people. So it's like $100 a year for Clockify. So I don't know. I mean, it stinks that I had to pay for all that right now this week, but it's only once a year. So $100 a year per person. I'm sure I'll use it more in the future. It does have GPS tracking, which is pretty cool. So I can see where he and my truck are at all times. Okay, trying to wrap this up. Maintenance. This was an oil change, so it cost me $330 to get my oil changed. That's pretty standard, I think, for my 18. I'm going to get my oil changed every 2 months in my local truck and every month in my over-the-road truck. Okay, the last thing I want to touch on is depreciation. This is super important. So you can see here, after all the expenses, I was negative $160 last week, but I would have been positive. I would have had my first positive week if it weren't for depreciation. And I was thinking about my video on Friday, and I was super excited because I thought I was going to be positive, but I forgot that I have depreciation coming out at the end of every month. So I talk about depreciation a little bit in my other videos, but depreciation is super important. And with any machinery, building, equipment, any fixed asset, any long-term asset in your business, let's just say you went out and bought a $30,000 truck today. You will not be able to just write off $30,000 as an ordinary business expense because you're going to be using the truck beyond 1 year. So there is a tax incentive, tax code, section 179, and you can write off the entire value of a commercial vehicle in the year that you purchased it, but that's like kind of like an extra tax code that you need to go through. But ordinarily speaking, if you don't go through any special circumstances, you need to account for depreciation of your commercial vehicles and your machines, equipment and buildings. So a commercial vehicle depreciates over 5 years, which is 60 months. So you basically just take the value of your truck, however much it's sold for on the bill of sale, and then you divide that by 60. So my truck was $28,000. So I took 28,000 divided by 60. So every month I depreciate $474 of that of the truck as a business expense. If you don't want to track it every month, you could just do 28,000 divided by 5, and at the end of the year, you could just write off 20% of the vehicle every single year. But depreciation is really important. You need to capture depreciation. That way you can know how much to write off. Because whenever you pay for the truck, or whenever you pay your monthly loan every month, the amount that goes to principal is not a business expense. That's just transferring money from an asset to a liability. So that's not an actual business expense. But depreciation, that's how you capture the business expense of your box truck. Okay, so a lot going on. I know I talked about a lot, and I try to keep it somewhat understandable. But in review, I almost had my first profitable week, but I'm not quite there yet. I will update you guys next week, hopefully, as I get this short-term local contract up and running, and as I get my over-the-road driver continuing to operate. Hopefully I can be profitable eventually. But I appreciate you all watching. If you like these videos, please subscribe to my channel. I post every Monday a new weekly profit and loss update. If you guys have any questions, feel free to reach out. You can find my information on my website, harrisburgbookkeeping.com. And you can find me on Facebook at Harrisburg Bookkeeping. And reach out, send me an email, give me a call. I'd be happy to help if you guys need any assistance with your bookkeeping, with your trucking company, anything like that. So appreciate you guys watching, and I will see you all next week with my end of September monthly recap.